Good morning from Cboe Global Markets. I'm Kevin Davitt, and this is Vol 411 for Tuesday, September 24th. We're moving toward the end of Q3 with a distinct lack of macro volatility in U.S. equity markets. 10-day realized vol for the S&P 500 is at 2019 lows, and you have to go back to October 3rd of last year for a lower measure. Since September 11th, every SPX close has been between 2990 and 3010. The S&P 500 index is right at 3,000 as I stand here, and the VIX index is 15 on the nose. Those looking for potential volatility catalysts this morning, we saw a worse than expected U.S. confidence number. Perhaps it's a blip, perhaps it's an inflection point, time will tell. Now, this morning we also had President Trump speaking before the UN General Assembly. His tone has seemingly been construed as less than conciliatory, particularly as it pertains to China. Now, high-level trade talks are supposed to get back underway for the umpteenth time in early October. Also, it's about to be October. And while I am not advocating seasonality in your trading, over a long time frame, October has tended to be a volatile month. Using the VIX index going back to 1990, October has the highest average VIX level, followed by November. Now, in VIX trading, it's imperative to keep in mind the futures term structure, which is in its more typical contango currently. Standard October futures and options have 22 days until expiration and are trading around 1675. November and December futures are trading 18 even, and the curve flattens out between 1880 and 19 even. Looking at options trading, there tends to be a lot of ratio spreading back here. Today there was a November 16, 14.5, 1x2 put spread. Paper paid 13 cents, and targets and November expiration settle at 14.5. That's Vol 411. Thanks for tuning in.